Buy, sell or rent out your property with Century 21 and you could win a 2-bedroom apartment on the Sunshine Coast worth over $400,000. Visit c21win.com.au to find out how.
Hello and welcome to Your Property Empire. I'm James Agonixon, filling in for Chris Gray this evening. On the show tonight, with a new financial year almost upon us, what does the next year have in store for the property market? With many of our capital cities increasing in value significantly over the last few years, what are the chances of those owners using their equity to purchase in more coastal regions and have a bit of a sea change? And is it really possible to win a $400,000 apartment on the Sunshine Coast absolutely free, or is there a hidden catch? But first, the CoreLogic May Home Value Index reported 1.6% rise in capital city dwelling values over the month, taking values 5% higher over the calendar year to date. So how would we characterise the property market at the moment? Based on that information, well, joining me tonight, give his opinion on plenty of things, Charles Tarbey, Chairman and owner of Century 21 Australasia. What do you make of it, Charles?
Well, it's an interesting concept of pricing because everybody thought it would come down or crash, or there's still talk of a bubble. Like Peter Switzer and I have had about 6 or 7 catch-ups on the show here about the bubble and so on. We saw the prices moving gradually this year. Well, it really did. We didn't see any problem with it. We thought they'd continue to rise because the interest rates are so low. But what we didn't expect is still the shortage of stock in certain areas, and it's certain areas that are driving the auction clearance rates more than others. And so, again, it's distorted. You've got one area of Sydney or Melbourne where the clearance rates could hit 70 or 80%, and in fact in Sydney in the 90s. But when you look, but when you look at it overall across the entire marketplace, it drops into the 70s, and that's still very high for this time of the year. So the one thing that's happened is that the areas where there's shortage of stock have still kicked on, and there's still price growth there, and that's distorting the overall pricing at the moment.
And how confident are you that the rises that we're seeing, and as you say, it's probably depending on what areas you're looking at in various capital cities, there's divergence of growth, but the general sustainability of the growth, I mean, is it at a level that is sustainable, do you think?
I was a bit concerned about when interest rates dropped, surprisingly, going back last year. I've not been in favour of it, but it's not something to do with the real estate market. It's certainly, it's outside of our control, but it impacts on the real estate market. And I think the prices shot a little bit higher than they should have at that point in time. So I think now we're riding in territory in some areas where I'm nervous about pricing. And there could be in some areas a reversal of equity based on the fact that if interest rates do move, and of course, given the economies we've got around the world right now, any Reserve Bank or government that tries to push a move upwards on interest rates right now, they just crash the economy again. So I don't see a change there. So I think people are still going to go out and buy more than they should, borrow more than they should, instead of reducing the debt that they have right now.
And another interest rate, and it's funny, since we saw what happened on Friday with the UK's decision to leave Europe, you've seen pricing come in quite a bit in terms of the likelihood of a further rate cut. A lot of people talking about August. Firstly, do you expect another rate cut this year? And secondly, what impact does that, do you think, likely have on property prices?
Yeah, I do think it will have a negative impact on property prices, meaning that they'll move upwards.
Yeah.
And I know that sounds strange coming from a real estate practitioner, but at the end of the day, if you have that growth, cycle of growth that's disturbed, then who knows where the next cycle is going to start or where it's going to fall. It all becomes very difficult. And the interest rate reduction is possible. And we only have to look at the 3 to 5 year fixed rates and watch their movement to determine what the variable rate's going to be. And if they start pricing those down, which you see them doing at the moment, then you can almost guarantee an interest rate reduction. I do think it'll impact negatively on price growth, again, because I'm concerned that people look at it and go, well, hell, I can borrow more, instead of stabilising their debt and using that cash to reduce debt.
And is it worrying because, they're not going to go down forever? I mean, I know at the moment we're certainly not talking about interest rate increases, but at some point that's going to happen, and it's going to, the level of leverage that some people perhaps are taking on, could become an issue.
It can become even more an issue because of how low they are. We always refer to if interest rates were at 10% and you budgeted for 10% and you're sitting there and you're okay, and they go up 0.25% or they go up 1%, you might get a 10% increase. But if they're sitting at 4% and they nudge up to 1%, then all of a sudden that's a 20+% increase. So if they do nudge to 6 or they do nudge to 6.5, then people who are paying a certain amount right now are going to find themselves in a position where they're going to be paying 60 to 70% more for their mortgages, and that's when it all starts to change. And it changes very, very quickly at the top end first, because that's where the big dollars are. And if the equity markets start to have a bit of a nervous time and people aren't making the money that they used to make, then it has a double impact on those areas. And that's usually the area we find that price drop is significant.
Is that right?
Significant.
I mean, some people might think that they would be somewhat buffered because perhaps there is a level of affluence there that would cocoon it, but has that history shown that's often not the case?
You'd be surprised how many people just own their home and they haven't invested elsewhere, so they put millions into one spot and haven't been able to take it out into other areas. And so it does become a concern, and that's where we see it the most. And the reason for it is really quite simple. If you look at a property, say, in an affluent area, there might be, when the market tightens up, only 50 people who could probably buy it. If you look in an average area, there could be 50,000 people who could buy it. And so you've got that all of a sudden the negotiation at the top end becomes really tough.
And Sydney and Melbourne, would they be the natural capital cities to keep a watch on for those sorts of price movements?
They are. I mean, I've got some offers on property I have, which is commercial property, commercial strata, and I'm looking at taking it. And people are asking me why, because I don't like to sell property. So the reason I'm looking at taking it is because I think minority-type properties like that, I'm going to have only a few buyers. If I need to sell it, if I want to liquidate it in a year's time, I'm going to find it harder to do so.
Right, look, some interesting news out today. The NAB joining the other big three banks cracking down on lending to foreign property buyers. Now, NAB, the last of the big four to restrict foreign lending after CBA, ANZ and Westpac made similar moves over the past couple of months. Now, it says it will now only consider foreign home loan applications to applicants who have existing Australian income. We spoke to Tony Davison from Henderson Maxwell a little bit earlier today. He was telling us why he's cautious on property, especially if we see another rate cut. Take a listen.
It's a really hot market. Everyone knows property's been hot for a sustained period of time now, and each time the RBA cuts, people do what they know best and they go and borrow for property. The issue I've got is, again, I think you were just saying in that piece, or Donna was saying in that piece, the number that are yet to settle. You know, there is this vast swathe of stock that is going to hit Australian markets, property markets, in the next couple of years, predominantly around the CBDs of Melbourne and Brisbane. Very well documented, and I think you're going to plausibly see not only a decline in yields from those properties, but at the same time a lot of investors trying to get out of those properties when they're being forced to settle at valuations that are lower. Bottom line, I think that it will have an impact on bank earnings, but I think it will take some time to play out, and I'll be looking for 3 to 4 years before it really starts to take hold. But for us, investment property market at the moment is an absolute avoid. You're getting yields at the moment before costs of about 3% in Sydney and 3.4% in Melbourne. It's in the why bother territory. You know, seriously, why would you bother investing in an asset that returns so little and was totally reliant on capital growth or inflation in rents in the long term? It's just not going to happen.
No uncertainty there in terms of what Tony Davison thinks about investor property, but does he have a point? In particular, the amount of properties, apartments, be they in Sydney or Melbourne, particularly I know Melbourne's been highlighted in news recently, that's about to hit the market when you've already got a yield that really probably not as great as many people had seen in the past.
Yeah, the yield is always a question mark, but any investor that just focuses on yield alone, it shouldn't buy real estate. You know, if you want yield, you can go to regional areas, country areas, and you'll get it, but you may not get any capital growth. So it's a double-edged sword. I agree that you've got to be very cautious about buying property now, buying for investment. If you can't do it for the long term, don't even look at it. Don't even go anywhere near it, because it is a really long-term proposition now, more than ever. But it's like everything. When everything's hot, everybody wants to jump in at that time.
Yeah.
And by the time you usually jump in, it's on the other side.
Now, speaking about things that have been making national headlines, Century 21, recently making national headlines around giving people a chance to win, correct me if I'm wrong, $400,000 apartment on the Sunshine Coast if they explore their property options through the group and transact. Talk us.
That's correct. Yeah.
What's behind it?
I think at the end of the day, most real estate companies promote their brand out there, whether they're a franchise or whether they're an independent, and they have various methods of promoting themselves. And I think we all move along the same lines. I felt that I wanted to do something different with Century 21, and this kind of giveaway has never occurred. And it is a genuine 400,000 or thereabouts. You know, who knows what?
It's always moving, right?
Who knows what it's going to be worth? And it's a property that one of our officers is selling off the plan, and I chose the apartment, and it has a value with including stamp duty and all of $400,000. So we put it out to Century 21 Australia and New Zealand offices, and any clients, existing clients, are automatically involved, and anybody who comes in and does business with us goes into a draw, and at the end of 12 months, out come the lottery people, and some very lucky person is going to win a $400,000 apartment.
Look, what's the reaction been like?
It's incredible, actually. It's a new thing, so we're learning. We've been 3 weeks into it. This is 3.5 weeks now, and we've had over 80 officers receive multiple leads in that very short period of time. In fact, I'm being copied on every lead because I want to see every person who's interested. I want to see what the movement's like. So my phone will go off varying times. Over the weekend it went off about 40 times with different people who are clicking through. So we're now in the hundreds of leads that have come through. One office I know has received 15 separate emails of interest regarding property, and these are landlords as well as buyers and sellers. So it's new, and we're going to keep looking for different ways of promoting, whether it's social media marketing, whether it's paid television advertising. Some way we're going to continue to brand it until we find the best angle for it for our organisation.
All right, let's bring in Tom Panos, joining us now from our Sydney studio. Of course, Tom from News Corp. Tom, appreciate you joining us this evening. Let's talk properties. What have you got for us? You've got one for us tonight.
Yeah, well, I've got one of the properties that I think Tony from I think, was he from NAB that you had on before?
Oh, Henderson Maxwell, Financial Planning Advisory Service.
Right. Well, I don't think he'd put a cross against this one because it doesn't meet the oversupply that he was suggesting with the unit market in Sydney and Brisbane in maybe 2 years. This is in the inner west of Sydney, in Newtown, in a great street, very close to the Sydney University, very close to RPA Hospital, very close to King Street, Newtown. It's an actual 219 Wilson Street, Victorian Terrace. It's got a price guide of 1.6 to 1.7 million, and it's going to auction on the 16th of July, and it'll be interesting to see what that property fetches because, you know, it's 2 weeks after the election, and it's going to tell us whether people have been spooked or whether they're happy with the new government.
Yeah, these are the types of properties I was referring to. The clearance rates, Tom, you correct me if I'm wrong, but the clearance rates are getting close to 90s in some of these areas, and maybe more.
They're very, Charles, they're extremely strong, but they're not, as you've alluded to before, where I auction is not reflective of all of Australia. So where I auction the inner west of Sydney, traditionally, you've got an undersupply of properties and an oversupply of buyers, as long as they're on the basis that they're houses. We are beginning to see a bit of nervousness in units. So plenty of times I rock up to a unit and there's only one person that's registered. And I would echo some of the things that, you know, Tony said, and that is that I do think to myself, if we're getting the jitters with buyers on the current standing and listing quota of units, what's it going to be like when there's going to be a lot more units on the market in the next 18 months?
Tom, you made mention of the election and see if there's any jitters post-election. What about in the lead-up from the areas that you operate in, the people that you speak to? Has it been at all an impact on people's thinking?
Yeah, I think, well, from a vendor's perspective, a lot of vendors, and they do this every election, and that is they decide to do nothing at around election time. So we're going to see a heap of vendors that are going to come on the market late July, early August. So it's withheld their decision. There's certainly been a bit of concern by investors and buyers who have a belief whether it's true or not that if Labor were to get in, that it could potentially mean that there was a bigger likelihood that real estate prices won't grow and they could be subdued. So I think that clarity is probably needed there for those buyers, James. So they're the two impacts.
And look, Tom, just finally, you sort of made mention of a couple of the characteristics that you're seeing at the moment. What do people need to see in order to start moving property at the moment? What do people want and what's not doing well?
Okay, any home that's got a major challenge to it, be it that it's on a really busy road, is being penalised. If there's a unit and it's in a complex where there's lots and lots of units, like 50, 100, they're being compromised. Any suburb that's got an oversupply of units on the market means that they're not doing good, because buyers are walking away and saying, well, if I can't buy it at a great price, I'll just keep looking. So in a nutshell, houses, particularly if they're in the medium to the lower price range of that suburb, they're faring very well. Units are beginning to show some signs of nervousness.
Tom Panos, got to leave it there, but great to talk and get your thoughts as always. Thank you.
Thank you so much.
Time for a quick break here on Your Property Empire. When we come back, plenty more from Charles Tarbey. Stay with us.
Whatever your financial goals, having a plan tailored to your individual circumstances can help you achieve them. With the help of a Commonwealth financial planner, you can start to make your financial goals a reality. To get started, visit commbank.com.au/mygoals to book a free initial consultation with a financial planner. It's a no obligation meeting where you can talk about your goals and ask any questions you have.
It's amazing how powerful a piece of paper can be on election day. Your vote will help shape Australia, so it's important that you understand how to make it count. On election day, you'll receive 2 ballot papers, a green one for the House of Representatives and a large white one for the Senate. On the green ballot paper, you put a 1 in the box beside the candidate who is your first choice, then a 2 in the box beside your second choice, and so on, until you've numbered every box. This election, the way you vote for the Senate has changed. On the white Senate ballot paper, you now need to put a 1 in the box above the line for the party or group that is your first choice, then a 2 in the box for your second choice, and so on, until you've numbered at least 6 boxes. Or you can choose to vote below the line by numbering at least 12 boxes for individual candidates in order of your choice. To learn more, visit aec.gov.au or call 132326.
Welcome to QuickBooks Online from Intuit. Manage your small business finances with it. It's easy to create instant invoices, capture receipts, track sales, expenses, VAT and GST. Get started with QuickBooks Online today and get up to 30% off.
To find your ideal hotel, just go to Trivago, type in where you want to go, select your check-in and check-out dates, and search. Remember, Trivago shows you all the different prices for the exact same room. Hotel Trivago.
They're all talking out there saying, how good is he? What about a comeback?
Well, I'll come back with you as my campaign manager, because it's only under your guidance here that I've started to sharpen up. I was going terrible until I came on Jones and Kay. So if my stocks are rising, it's because of you.
Latham and Jones.
Welcome back to the program. Well, nearly everyone that buys or sells property needs to deal with a real estate agent, and there's a number of our viewers that have chosen to be an agent as a lifelong career. Of course, joining me on the show this evening, Chairman and owner of Century 21 Australasia, Charles Tarbey.
It's a lifetime career, all right.
Is it? What would your advice be to anyone before we turn to those people who are doing it now, those who are thinking about becoming one?
Yeah, if you've been in real estate, if you've gotten into the property industry in the last 3 years, you've actually never been in real estate. And this is what we really need to get to a lot of people. A lot of people are coming in now and putting on the suit and thinking that social media marketing, they can get a listing and off it goes. And in some cases, that's still there, very minor. But real estate's all about two things. We always say there's only two types of markets. One where you get a buyer up to meet the seller's incredibly high price, and that's called a boom. And the other where you get the seller down to meet the purchasers what they think ridiculously low offer, and that's called real estate. And that's what we're in 90% of the time, and that's not what we've been in the last 3 years. So if you're going in expecting what you're seeing or have seen in the last 3 years is going to be what real estate's all about, you are not going to make it in the industry.
So for those people that have been able to carve out a successful career in both the good and the bad times, I mean, are there any similarity, any sort of characteristics that just go, you know, this is why they do it?
It's really quite simple. They actually follow up. They actually communicate. Our industry is notorious for lack of follow-up. I rang the Department of Fair Trading many years ago when I was researching a topic for a second book I was writing. I wanted to find out what the biggest complaints were. And one of the biggest complaints was real estate agents never got back to them about this property or this situation. They felt they lost out because of it. The best agents are the ones that understand that electronic process, the electronic side of our industry, which dominates our industry, shouldn't dominate the agent. It should dominate your marketing, but shouldn't dominate the way the agent thinks. I speak to some of my millennial staff and I go, did you get that done? They go, yeah, I sent them an email. I said, that's not what I asked you. And so the best agents are the ones that have learnt how to blend technology with that face-to-face, voice-to-voice communication levels, and those are the best ones, and they continue to make it right through all of the different changes we have in real estate.
So recently sold our home a couple of years ago, and we had agents come in and basically pitch for the business, and it was difficult. It's, you know, there's the one who promises you the earth is, oh, fantastic, we can get that. The other one who perhaps sort of manages your expectations, and the one that we end up going with, the one that just seemed to kind of fit the way that we were thinking about the market, about the house, all that sort of stuff. What would you advise the public to consider when they're choosing an agent?
And that, again, it stands out really strongly, but not strong enough for most people, because unfortunately perception is what people believe. And you know, the old saying, when perception meets reality, reality comes off second best. When you look out in the marketplace and you see all these agents with hundreds of signs and people go, that's them, I'm going with them, they're the most active. They are active, but the agent I'd go with is the one with the most sold signs, not the one with the most for sale signs. But the perception is that's where you go. And so all you end up doing is ending up putting your property for sale with a bunch of other people who haven't sold their property. So the perception is the biggest issue I find of all things. And I tell people, if they're going to think about listing their property for sale, find the agent that's got the most sold signs, tap on the door and speak to the people who sold their properties and find out what the experience was like. If you really want to know. If you really want to know.
And what about, it's the age-old question about commission and whether or not it is in itself a negotiation between the vendor and the agent.
That's the last thing you negotiate with the agent is their commission. If you want to get an agent offside from day one, if you want to get an agent thinking about whether or not it's going to be worthwhile dealing all of that time with that property, that's where you start. You focus on commission. All I'm interested in, and the best agents that are interested in doing, is getting the best possible price. The commission is secondary. You'll happily pay the commission if you get your price and more, the expectation. So that if an agent's going to try and negotiate with you, if they do negotiate with you on commission, what are they going to be like in terms of negotiating on your behalf with a buyer? Are they going to be just as weak and cave in? I mean, at the end of the day, if I can get the best possible price for somebody, that's the most important thing. And that should be what's on a seller's mind. Going to an agent that's offering less commission or discounted commission or whatever is not the answer. It's about the best possible price.
And just very quickly, a tip that was given to me was actually by Chris Gray, was the idea of...
That's when he's around.
Yeah, that's when he's not travelling around the UK, is to potentially look at adding an incentive. Look, I will give you another percent or 1.5% if you hit this target or if you get this much above. So incentivise.
And that's where it should be. It should be incentivising the agent, not de-incentivising the agent. And that's exactly right. Yeah.
Right. Almost out of time, but of course, want to know what's happening around the property market in Australia. We've got our slides. Talk us through it.
We talk about the auction clearance rates. They were pretty steady this week. Came in at 69.1% as an average across the country. This time last year, they were 77% or 76.9%. So there's a difference in there. You can see it in the change because Sydney came in at number 1 at 77.1, and again, if you take out the western suburbs and some of the areas that don't perform well, that would indicate to me that the auction clearance rates mostly were in the early 90s. Melbourne came in at 68.4%, but all capital cities really performed lower in clearance rates than they were this time last year. So there is definitely a trend downwards in terms of clearance rates.
Homes advertised for sale?
Yeah, they're down, expecting that with winter, 2.55% down this week over last week. But the interesting stat that I'm still looking at is that we've got 10.4% more stock today than we had this time last year. So that must be sitting out in the areas where the market's not so buoyant. So there's more stock available and less coming on. So, it says that, same with New Zealand. New Zealand's a complete opposite to us. They had a 15.1% increase in the level of stock this week over last week. So they're probably preparing for their spring a little earlier than we are now.
That's a big amount.
That's a great marketplace in New Zealand. It's challenging with the stock.
And look, residential vacancy rate obviously plays into the whole yield thematic we spoke about.
Look, Sydney's the best, 1.84%, incredible vacancy rate. When you look at Melbourne, still very good, 2.87%. Perth has always been the worrying one at 7.58% this week. It's climbed again. So the average between those three capital cities is 4.096%, which is great as an average. But when you've got a capital city like Perth still that high, a lot of the agents are struggling to fill those properties, meaning that landlords are either going to have to offer incentives or reduce their rents.
How closely do you look at the week-to-week, the month-to-month movements in these?
Yeah, every week, because I try to prepare for what we talk about tonight. So I keep the stats on 4 main areas, and I've been keeping those for years. And it's interesting to watch the charts. So if I compare this year to 2 years ago or 3 or 4 years ago, it'd be really interesting one day to sit and let people see what it's really like.
Absolutely. Charles Tarbey, an absolute pleasure. Thanks very much.
Thanks very much.
That is it for the show this week. Thanks very much for watching.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.